Despite the Russian gas price cap recently adopted by the European Union, the oil market is now trading in an even more pronounced sideways trend than the foreign exchange market. In fact, it was the decision that caused stagnation. Although Russia has not yet responded to the oil price ceiling, Alexander Novak's latest statement leaves no doubt that the response will include both oil and gas. Though it will take some time, according to the Russian Deputy Prime Minister, it's still necessary to study all the legal aspects of the latest decision made by the European Union. Given that the Russian government is in no hurry to take action, Moscow will provide an official response at the very end of the year at best. Moreover, there is no need to rush, since the current prices for both oil and gas are significantly lower than the price ceilings. Nevertheless, Novak's comments make it clear that Russia will definitely respond to the imposed restrictions. All this adds to market uncertainty. It's not clear what exactly the retaliatory measures will be. This fact is partly the reason for rising energy prices. At the same time, the market is balanced by the lack of a response itself. In addition, one should not forget about possible energy shortages. Russia's seaborne crude shipments collapsed in the first full week of a group of 7 sanctions, while TC Energy Corp pushed back the full return of its Keystone oil pipeline by a week. Notably, this is the largest pipeline ensuring energy supplies from Canada to the United States. Elsewhere, oil prices remain supported by prospects of a stronger demand. This especially refers to China, the world's largest crude buyer. Beijing appears post the end to its zero-COVID policy and take additional measures for raised consumption. According to the trading chart, Brent crude oil futures have been moving around the level of $80 per barrel since the beginning of this trading week. The levels of 78.30 and 81 serve as the boundaries of the range. If the price breaks through one or another boundary on the 4-hour chart, the sideways trend will be broken, and thus there will be an increase in the volume of trading positions in the direction of a breakout, which will help us define a subsequent price move. Unlike the energy market, the absence of retaliatory steps by Russia is a destabilizing factor for the ruble. The lack of response makes market participants think that Russia has actually come to terms with the oil and gas price caps. Thus, a possible decline in revenue from energy sales, forming a significant part of the country's balance of payments, could deal a major blow to its economy. However, such a turn of event was quite predictable. Meanwhile, the dollar managed to rise above 70 rubles. Such a strong rally can be attributed to the Russian gas price cap, as well as the related delay in providing a response. As soon as the Russian government announces its decision on this issue, the dollar will most likely hit towards the level of 60 rubles. There is also an assumption that the ruble has dipped amid massive currency purchases by Russians who are preparing for the holiday season abroad. From a technical point of view, a rise above the level of 70 rubles per dollar indicates increased bearish sentiment. If the price consolidates above this level on the daily chart, the greenback will extend gains. Alternatively, a price return below the 70 mark may be regarded by traders as a rebound from the resistance level, and in this case, the ruble is expected to resume its bullish run. Gold unexpectedly showed an impressive rally, climbing back above $1,800 per 3 ounce, but yesterday's macroeconomic calendar was bereft of any important releases that could support the metal. Moreover, the dollar remained relatively stable despite its inverse correlation with gold. In other words, there were no ground for strong upside momentum. Thus, such a strong price change was solely of a technical nature. The asset has added more than 2.5% since last Friday, with no dramatic change on the trading chart. In fact, the quote has returned to the high of the upward cycle, the area of 1,825. To extend gains, the quote needs to consolidate above 1,825 at least on the 4-hour chart. And in this case, the way to 1,850 will open. Otherwise, the yellow metal may bounce back down and settle below the $1,800 mark. And that's all for now. We continue to learn developments on financial markets. Subscribe to our channel and see you in our next news release. Don't miss them and stay up to date with us. See you soon.